Hello, everyone, and welcome to yet another of our series of webinars here at MJBiz Daily. I'm Chris Roberts. I'm the executive editor here at Marijuana Business Daily, and I'm excited to introduce our speaker today and listen in with the rest of you, on the subject of today's webinar, which is everyone's favorite bit of the Internal Revenue Code 280E, and how exactly plant-touching cannabis businesses can deal with this bit of tax code that punishes them uniquely. For all of our friends watching around the world, I want to welcome you again to this event. When the session is over, we want to invite everyone to follow us at MJBiz Daily and MJBizCon on your favorite social media platforms, including LinkedIn. And please don't forget to check out our daily offerings of content which includes everything from breaking news to timely trend pieces and success stories, as well as detailed benchmark research reports and more webinars just like this that can apply directly to your business. Please subscribe to our newsletters to get the latest news and content delivered directly to your email inbox several times a week. And of course, don't forget to buy your tickets to MJBizCon, which is in a couple weeks now, December 2nd through 5th. In beautiful Las Vegas, Nevada. Let's take a quick second to look at this platform that we're using today, the On24 console here. You're looking at it right now. It can be customized. You can move some of these windows around. You can resize them. You can make the videos or slides larger or smaller. You can also find an array of interactive tools, including a Q&A function. But in the toolbar, you'll see a media player. It's for your video and for your volume. There's a Q&A box that should be at the top right of your screen. Please put your questions in there. We'll get to as many as we can at the end of Justin's presentation. And there's a resource list that you can also find to download some of these slides and related resources. Some folks have already, that is brought to you by Justin Botillier here at Calyx CPA. Some folks have already asked, this presentation is going to be recorded, but most important to us, we think, is the survey icon, which you can click to share your feedback at any point. Your input's extremely important to us. So before you log off today, after Justin fields your questions, please be sure to take a couple minutes to share your feedback. If you have any follow-up questions or if you need help with your experience, just send in a question with the Q&A box or press the help icon. And then myself or someone else from our team at Emerald will attempt to assist you. And with that, I want to introduce our speaker. His name is Justin Botillier. He is a certified public accountant with Calyx CPA in Oregon. He has been handling the cannabis industry for quite some time and has unique experience with the issue of 280E. And without further ado, Justin, would you please take it away?
Sure, yeah. So again, my name is Justin Botillier, CEO of Calyx CPA. We're a boutique CPA firm based in Southern Oregon. I've been in self-employed for over 20 years. About 2014, I started doing cannabis tax returns for the Southern Oregon grow market. A little before that, it was mostly medical, but as recreational rolled out in Oregon, then I started to get really informed in terms of 280E, especially when dispensaries started rolling out, and I just saw how damaging 280E was when you took it and understood 280E at face value, which is all we really had at that time. But over the years, we've discovered different tax provisions that kind of helped mitigate that impact from 471A to then 471C. To now a new chapter, and that is, whether or not 280 even applies ahead of rescheduling, which is the primary conversation that we're going to have today. We have been amending returns for recapturing lost deductions. We started with 2020. We did some work with 2021. We're now doing 2022. The statute of limitations have closed for 2021. We're moving forward to 2022 and to current. And we've been seeing some success. I would say right now, this is not advice. I have to say that you have to make the judgment yourself as to whether or not applying for refunds, and amending is right for you. You have to weigh the risks, which there are risks. I don't know exactly what those are, especially during this time of shutdown and the fact that the IRS has been gutted. But we have been, especially if you're able to e-file these returns, we have been seeing a bunch of refunds coming through. So that's just some anecdotal information for you. But I thought I would start this presentation. I hadn't planned to, but when I did the announcement to this presentation, I got a little bit of hate mail, which we do get it from time to time, mostly email. Sometimes there was an article that said that what we were doing was off base, and then when we exhibit at various conferences, we'll get like people confronting us with us saying that, hey, you can move forward without, or we're saying that you have a reasonable argument for moving forward without reducing deductions for 280E and amending your tax returns for refund. So we're saying there's an argument here, and it's reasonable, which qualifies for you to be proactive in not paying tax on phantom income. You can be proactive in presenting a reasonable argument to the IRS and amending your tax returns for refunds. Okay, and I think I said I've done this webinar like 4 times, and every time it like evolves, and our case just keeps getting stronger and stronger. One area that I'm going to talk about a little bit more is you can't see my screen actually, you're looking at the slides, but Nathan Pollock wrote a opening brief to the tax courts for Ultra Health versus Commissioner of the Internal Revenue Service. I'm going to talk a little bit about that. And he has taken these things that I'm about to tell you, these facts, and has so elegantly presented them in the tax court. And I am excited to provide this information to you. But first, I want to read this email I got from a hater. You are dead wrong on this stuff, and you are negligent and fraudulent if this is how you are preparing returns and advising clients. So that's great. It's great motivation for me, because I appreciate when people give me feedback, because it makes me like question whether or not I'm on the right track. And then I do a deep dive into the facts that I have available to me. Now, this stuff isn't mine. Everything that I'm presenting you came from other tax professionals like Nathan Pollock, Nick Richards, some various other people who write blog posts and articles. Our business caters, 95% of our clients are in the cannabis industry. We've been doing this for over 10 years, and I study this, this stuff. But I'm not an attorney, so I miss things. And so for those of you who feel that I'm off base or there's something that I'm missing, I encourage you to email me. Let me know what I might be missing here. But until then, I'm gonna talk to you about these various things, and I don't know really where I'm missing information. Is it the IRS says that 280 applies, so therefore case closed, or is it the definition of 280E that I'm about to show you and our interpretation of it? I mean, is it if the HHS's letter recommending that cannabis be rescheduled to Schedule 3, is that binding to the DEA? So these are all things that we'll talk about. I digress. We're going to move on now. Okay, so I shouldn't have to tell you what 280E is. I'm hoping that everybody here knows what that is by now. The people who this is going to most benefit are people who are going to have been in business for a few years and have suffered the consequences of 280E. People who are currently in business in 2025, new to 2025, cannabis will probably be rescheduled in 2026. I don't know for sure. It's all up in the air. You will need to address 280E on your tax returns for 2025. But I think once it's rescheduled, the IRS is just going to say, okay, well, in 2026, you no longer have to apply to 280E, and they're going to back out of their enforcement of 280E. But for 2025, I personally will demonstrate my arguments, demonstrating, or I will introduce my arguments demonstrating that I don't believe 280E applies right now ahead of rescheduling. And so if that's an approach you want to take, that's what my clients are choosing to do. But as you know, 280E only allows you to take your cost of goods sold, and you cannot take your overhead deduction. So for people like dispensaries, it's devastating. There are some tools that we use, 471C mainly, and then of course now our no 280E argument to not reduce deductions and pay income on tax on phantom income. We want to avoid that, right? And so I think we have enough tools now that we can boldly move forward without being impacted by 280E. And now it's like whether or not, well, can we go back and recapture those deductions? That's a little bit more of an aggressive thing to do. So, and that's what we're going to talk about today and why. So 280E, you know what that is. Of course, 280E applies to businesses trafficking controlled substances, Schedule 1 or Schedule 2, and cannabis is currently in a Schedule 1 substance, which means highly addictive, highly dangerous, and even under medical supervision lacks safety. Yeah, I don't know about you, but I've smoked weed before, and I do occasionally, and I'm doing just fine. And it's interesting the why it's still considered a Schedule 1 drug, but I'm going to argue that it clearly is not a Schedule 1 or Schedule 2 substance. But I don't need to do it. I'm going to rely on the authorities, the federal authorities, in fact. Biden, as you know, asked the HHS to reevaluate whether or not cannabis was properly scheduled as a Schedule 1 or Schedule 2 substance. And the HHS replied and sent a letter to the DEA for the DEA to start initiating the procedures for rescheduling cannabis, because they came to the conclusion that cannabis is not a Schedule 1 or Schedule 2 substance, but solidly in a Schedule 3 substance. It's very important that we understand that according to the HHS, cannabis is not Schedule 1 or Schedule 2 substance. It falls in the definition, according to the Controlled Substances Act, as a Schedule 3 substance, meaning that it does have medical value, it is not highly addictive, and it's not dangerous, okay? So, and then that was actually backed up by 250 pages by the FDA arguing all of those same points, okay? So it's funny that we let the DEA, who's an enforcement body, a policing body, decide what has medical value and what doesn't. So I don't know why there's a debate there, but you can choose for yourself whether or not cannabis falls within the definition of a Schedule 3 substance or a Schedule 1 substance like heroin, Schedule 2 substance like fentanyl. So let's see here. Okay, let's talk about the actual tax code. And those of you might not really understand the relationship between the IRS, you as a taxpayer, me as a tax accountant, and the tax code. And so I'm going to try to explain it. First of all, the IRS doesn't write the tax code. Congress writes the tax code. And the IRS's job is to, number one, enforce the tax code, and number two, clarify when there's ambiguity in the tax code, okay? So again, the IRS is not, they don't write the rules. They do write rules when there's a lack of rules or there's ambiguity in the tax code. So if you read the tax code 280E, you're going to see in there that 280E applies to businesses trafficking in controlled substances that, and then in parentheses, or not parentheses, but highlighted by the IRS or Congress itself, it's in parentheses, within the meaning of a Schedule 1 and 2 of the Controlled Substances Act. So if you go to the tax code itself, which is the law, okay, and you read that for yourself, this is what you're going to see. You're going to see that Congress wrote within the meaning of a Schedule 1 or Schedule 2 controlled substance, Schedule 1 and Schedule 2 of the Controlled Substances Act. So that's where there's a little bit of debate. And what I'm going to now present is how there isn't actually a debate. Congress knew exactly what they were writing, and they did not mince words. They did not say classified as a Schedule 1 or Schedule 2. They said within the meaning of a Schedule 1, meaning does it have, if it's a substance that is highly addictive, highly dangerous, has no medical value, then 280E applies. And to help me do that, I'm going to rely on Nathan Pollock's opening brief, which I was really happy to get validation because, as you know, we've been presenting these arguments for years now, and it's nice to see them written in legal language and actually taken to court. And in his brief, he has 3 arguments. 2 I'm going to touch on today. The main one being marijuana is not within the meaning of a Schedule 1 or Schedule 2, period. That's what he is taking to tax court. The third one he proposes is the canon provisions argument, where they're now petitioning the Supreme Court. And I'm not using perfect legal language here. So when I say things that are kind of legal, it may not be the right use of the words, but please be lenient with me there. So I'm not sure exactly, but I'm saying petition. Canon provisions and their cohort are petitioning the Supreme Court to re-argue essentially what had failed back in 2005, the Gonzalez versus Reich suit that claimed that the federal government does not have the right to enforce the Controlled Substances Act on states with their own legal regulation for cannabis, because the federal government only can govern interstate commerce, according to the Commerce Clause, and cannot enforce the CSA on states in which they're siloed, because we're all siloed. We can't move product outside of the state. So therefore, it doesn't have an impact on our neighboring states, according to the regulation and whatnot. And therefore, for them to impose the CSA and therefore 280E on businesses, that's a violation of the Interstate Commerce Clause. I didn't mean to introduce that full thing now. I was actually going to get to it later, but it'll speed things up later on though. And then he also presents just the fact that the federal government defunded the enforcement agencies from enforcing, taking down medical grow operations and medical cannabis businesses. Licensed medical marijuana cannot be, it's not enforced. So it's not against the law because the federal government defunded the enforcement of it. So that's another argument. Those are his 3 things. But most of what I'm going to talk about is the number 1. Marijuana is not within the meaning of a Schedule 1 or Schedule 2 drug, which that is kind of like the nail in the 280E coffin in my mind. But you guys be the judge of that. And in case I don't get as nerdy as I ought to be with it, I've set up another webinar with Nathan Pollock himself, who authored this, and he and my business partner, Jamie, and Jamie, my business partner, is way smarter than I am in these regards. So we put it on your calendar, Monday, November 24th. We're going to have another webinar, and he's going to be the guest, and he's going to talk more deeply about his brief. But right now, the status of the brief is that it went to tax court, and the IRS has to respond. Not the IRS, the tax court has to respond by January 26th, and then he gets another month to respond again, and we'll see where it goes. A lot of people are skeptical about the law. They believe that, the federal government's going to do what the federal government wants to do, despite the law. And unfortunately, that feels very cynical to me. It's not necessarily untrue, But if this brief were to be read and reviewed, unadulterated by bias in a court that's unbiased, I don't see why it's not going to be successful. But that's wishful thinking in a lot of ways, and so we could talk about that later. But there are two main things that really make me excited about this brief, and things that I kind of knew already, but he really puts it out there, which is really good. And that's the question of, well, what did Congress mean by within the meaning of a Schedule 1 or Schedule 2? What did they mean by within the meaning? Well, the IRS is kind of concluded that, well, within the meaning means classified as, right? So they're like, if 280 applies, certainly Congress didn't mean, well, as defined by a Schedule 1 or Schedule 2 substance. What Congress meant was, if it's classified as a Schedule 1 or Schedule 2, and Congress and cannabis is a Schedule 1 according to the DEA and the CSA, so therefore 280 applies. That's how the IRS is interpreting this code. Or they're saying, well, we understand that cannabis doesn't, or no, now what they're saying is, well, cannabis is classified. We understand Congress said within the meaning, so that means that marijuana must still be a Schedule 1 substance according to the definition of Schedule 1 and Schedule 2. And I don't mean to go on and on with this, but I'm just trying to be very, very clear about how the cannabis industry in this regard is on the right side of history here. And he makes it, Nathaniel makes it very clear in his brief that we are on the right side of history, and our interpretation that that 280 does not apply to cannabis because cannabis doesn't belong, it does not fit the meaning of a Schedule 1 or Schedule 2 substance. It's classified as, it clearly fits the meaning of a Schedule 3 substance, but the IRS seems to be ignoring those facts. They're ignoring the fact that the tax code itself doesn't say classified as, and they're ignoring the fact that cannabis does also not fit the meaning of it. And so therefore, when we say that cannabis or 280 does not apply, it does not apply. You have to understand that, remember, the tax code and Congress are higher authority than the IRS is. So we, having almost equal, us as tax accountants and taxpayer having almost equal power as the IRS, can argue that, cannabis 280 does not apply. Okay, so what he says is, what Nathaniel points out is that Congress did not mince words here. When they said fits the meaning, they meant within the meaning, not classified. And the reason why is because he points out that in other areas of the law, in the Controlled Substances Act itself, they use classified as in the language. So they don't say within the meaning to mean classified as. And there was a court case, this Varian Med Inc. and Subsidiaries versus Commissioner, which is the tax court. The court stated that the courts must presume that a legislator says in a statute what it means and means in a statute what it says. So poetic. Enforce plain statutory text according to its terms. So, which means that if we go up against the judge, we don't mince words here. Within the meaning means essentially does it fit the descriptions of the Schedule 1 substance? Is it highly addictive, highly dangerous, and no medical benefit? We can assume that because the court ordered that the language be plain, or at least interpreted as plain language. But this is my very, very, very favorite. This is different than what I have been saying, and I was saying that same thing. Like, why didn't Congress say classified if they meant classified as? So this is why, and Nathaniel puts it very elegantly in his brief. He says that so my interpretation was like, oh, well, they said within the meaning just for this various purpose. Like Congress didn't, cannabis doesn't fit the meaning. And so therefore Congress is like, well, 280E shouldn't apply to cannabis, right? That's what I thought. I'm like, oh yeah, that makes sense. Like it doesn't fit the meaning, so 280E shouldn't apply. And that's very nice of Congress to do that. But he actually adds some clarification here that Congress had no intent of not including cannabis in Schedule 1 or Schedule 2, and therefore 280 not applying. They just wanted to make sure other substances got included as well that weren't classified as Schedule 1 or Schedule 2. I'll try to repeat. I'll repeat myself so you understand one more time. So Congress said within the meaning of, in order to capture substances that were highly dangerous, highly addictive, and had no medical value, that were not classified as a Schedule 1 or Schedule 2 substance. Which, if your mind should be blown, like now, because it's because what that means is that it backfired. It's backfiring because they were trying to capture other substances that the DEA didn't capture on their list so that they can enforce 280E, put 280E on them. But in this case, the HHS and the FDA are saying that, well, it does not fit the meaning of a Schedule 1 or Schedule 2 substance. So it ought to be classified as Schedule 3 substance. And according to 280E, the tax code itself that was written by Congress, 280E does not apply. Now, okay, so let's talk a little bit about the medical benefit argument. Some people are saying, well, just because the HHS and the FDA say that it has medical benefits and it should be Schedule 3, well, what, that's debatable. So here's some fun facts. By 2000, there was 8 jurisdictions in the United States that had medical cannabis programs. By 2017, scientific and medical literature conducted by the National Academies of Sciences and Engineering and Medicine showed that there was conclusive evidence that cannabis is effective in treating chemotherapy, induced nausea and vomiting, and substantial evidence that cannabis is an effective treatment for chronic pain in adults. So I don't know about you, but that sounds like there's medical benefits to me. And by 1985, there was 2 synthetic THC drugs that were approved by the FDA. Maybe these companies don't want cannabis to be considered having medical benefits because they'll lose some money from their synthetic THC. Not to be a conspiracy theorist. Okay, and then there's also this, which is interesting. And this is back in 2016, the DEA was asked to reevaluate whether or not cannabis ought to be a Schedule 1 substance. And they said, oh, well, it has no medical value, it has no medical benefit, according to our test. Well, the DOJ, which manages the DEA, had their Office of Legal Counsel reevaluate the DEA's tests and found that it was impermissibly narrow. And thank you to Nick Richards too for pointing this out. Nick Richards has been so good to us, to Calyx, in helping us recognize some of these things. And so what essentially they said was the DOJ, so the Office of Legal Counsel themselves, which is a part of the Department of Justice, which manages the DEA, said that the DEA's test was flawed. It should be thrown out. And here it is. This is the writing. All of these things that I'm telling you are in writing, in legal documents. This is not conjecture. I'm not making this stuff up. This is written. And here it is. The approach that the Drug Enforcement Administrative currently uses to determine whether a drug has currently accepted medical use and treatment in the United States under the Controlled Substances Act is impermissibly narrow. An alternative 2-part inquiry proposed by the Department of Health and Human Services is sufficient to establish that a drug has a currently accepted medical use, even if the drug would not satisfy DEA's current approach. So that means the DOJ itself is telling the DEA that you need to take into consideration the HHS's recommendation. Here are the 2-part test. current experience with medical use of marijuana in the United States by licensed healthcare providers, HCPs, like so. Okay, and that's number one. Number two, the FDA evaluates whether there exists some credible scientific support for at least one medical condition. The results of part one is more than 30,000 healthcare providers are authorized to recommend the use of marijuana. These guys are doctors, MDs. They're recommending the use of marijuana. Yeah, of course there's abuse. There's people probably, but there's abuse in the regular medical establishment, right? Like Oxycontin and these ones, fentanyl and whatnot. There is some, part two, there is some credible scientific support for the use of marijuana in the treatment of pain, anorexia, nausea, and vomiting. And then it goes on to say, no safety concerns were identified in our review that would indicate that medical use of marijuana possesses unacceptably high safety risks for the indications where there is some credible scientific evidence supporting the therapeutic use. Puts the nail in the coffin as to whether or not there's a debate about whether or not cannabis meets Schedule 1 or within the meaning of the Schedule 1 or Schedule 2 due to the medical aspect of it. There was a little bit of debate as to whether or not the HHS was bound or the DEA was bound to the HHS. This is a slide that I had in my last time I presented this. He argues that the DEA is bound by the HHS. If you read the actual CSA, and here it is, here's a little blurb about it. Here it is in the CSA itself. The recommendations of the Secretary to the Attorney General. So Secretary is ahead of the HHS, and the Attorney General is the head of the DOJ that manages the DEA, shall be binding on the Attorney General as such scientific and medical matters. So that's them, Congress, being pretty smart. They're like, oh, like the attorney, the HHS and the FDA, they're scientific bodies, and the DEA is a police enforcement body, and maybe the DEA should listen to the HHS and the FDA when it comes to scientific matters. So it says, and if the Secretary recommends that a drug or other substance not be controlled, the Attorney General shall not control the drug or other substance. So that, and he goes on to argue, what he was really saying was like, that whole article, he wrote a whole article on it, this guy. Let me go back to him. His name is Mason Marks. He was saying that the HHS is not using their power to make sure that these drugs are being classified properly. That he's saying that the HHS does have power to demand that rescheduling happened. And all of this, and of course, there is activity or processes being taken to reschedule cannabis from Schedule 1 or Schedule 2, but the delays are unwarranted. They're not law. The law is, listen, like the HHS and the FDA says it shouldn't be scheduled as Schedule 1 or Schedule 2. It needs to be rescheduled now, not until Trump says that it should be rescheduled. So I don't know, we just have so much ammo. It's not even funny. Oh, so the Chevron deference. So there is questions about like, okay, well, that's all good, Justin, that cannabis doesn't fit the meaning of a Schedule 1 substance, and 280 doesn't apply according to the law, and there is medical benefit, and that makes it so that 280 doesn't apply. But the IRS still is saying that that 280E applies. And I'm afraid of being audited. Okay, so I get that. Like, so the fear of being audited, that's kind of what is left. That's what's keeping the industry from embracing the facts. Is that okay? Well, the IRS said, well, that 280E still applies, and refunds will be rejected. Amendments will be rejected. It's still a Schedule 1 substance. So there was last year in 2024, I believe, there was an informational, and I actually meant to put these in the slide deck. I probably will, and then I'm going to update my website, our website, with this information, but back in June of 2028, the IRS did an information release. Until a final federal rule is published, the Internal Revenue Service today reminded taxpayers that marijuana remains a Schedule I controlled substance and is subject to the limitations of the Internal Revenue Code. The law with respect to the schedule or classification of marijuana has not changed. Taxpayers seeking a refund of taxes paid related to Internal Revenue Code Section 280 by filing amended returns are not entitled to a refund or payment. So that is the IRS informing us that they're going to continue to enforce 280E. Now, again, I will revisit the hierarchy of authority that we all play to, the game, the rules of the game that we're all playing. There's Congress, okay? Congress writes the tax law. As I have just demonstrated multiple times, 280E does not apply to us, okay, according to the tax code. Now, it used to be that the IRS could put out regulation, which is, again, remember that writing that I was talking about? If there's ambiguity in the law, then the IRS can put in regulation and can fill in the gap, and then that is the law. That's the law there. Well, first of all, 280E doesn't have any ambiguity to fill in any kind of regulation. Second of all, this court case that was overruled by our currently very conservative states' rights Congress overruled this what's called Chevron deference, which was essentially giving more power to the federal government and the agencies of the federal government to do kind of like rulemaking and then to enforce those rules. Well, they overturned that, and so now the judicial process has more power than the regulation of the federal governments. Now, this is good for us, bad for the rest of, bad for the environment, you know, because now companies can go exploit the environment, and then the EPA can't do anything about it unless it goes through a court system. So, but that's what's happening here now. Like, the IRS can't legally do anything about this. It's going through the court system. The final say will be when the courts decide whether or not 280E applies based on the facts and circumstances that I've presented here today, and that Nathaniel does a much better job in his opening brief. So, and guess what? That warning was not even regulation. There is a hierarchy of so that wasn't regulation. That was them announcing, hey, we're going to still enforce this. That is the lowest authority that they have. They're like private letter rulings where if you go and you say like, hey, I'm not going to apply 280E because of these, what do you think? And then there's what's called a private letter ruling. I don't know a lot about them. It's more of like a tax law thing. So some of my tax lawyer counterparts could probably talk a little bit better about that. But this was just a warning. This was them rattling their sabers saying, hey, you know, and when that HHS letter happened, people just started amending returns without any reason or anything. They didn't put anything in there. Or they were doing, they might have an argument. They might put in an argument, but they're just trying to deter you from amending your returns. That's the way IRS keeps people in compliance, is by deterrence. They make a spectacle of people. It doesn't mean that everybody's going to get audited. In fact, for years, we've been being told with our use of 471C and now doing no 280E that it's not a matter of if, it's a matter of when. And knock on wood, and I can count on my one hand how many of our tax returns in the last 10 years have been audited. And we disclose all of these things to the IRS and let them know exactly what we're doing. Chevron deference. I'm going to kind of like scoot through here. You guys are all welcome to take a look at these slides. I'm going to update them with some other information and post them on our website, but these will do. There should be some links for you. Oh, this is just this slide is all about the counter provisions of Verano Holdings going to the Supreme Court. You may have seen in the news that it's been kicked out of court multiple times, but that's because there was court precedents and the lower courts have to follow the Supreme Court's precedents. And that was in 2005, the federal, the more federalist Supreme Court ruled in the favor of the federal government. But now they're saying, well, if we can revisit that case, then now the states' rights Supreme Court, it's loaded with conservative Supreme Court justices. And in fact, in 2005, the two conservative Supreme Court justices, voted nay on it. I don't know what the specific dissented. They dissented, and they're saying, well, this isn't right, but okay, whatever, we're not the majority. But now those people are the majority. So if it gets reviewed or looked at by the Supreme Court, and the Supreme Court does follow its states' rights behaviors that it's been having, then this case should win. The company should win, and the Controlled Substances Act will not apply for states that have their own cannabis regulation. And the reason why I say that it will likely win is because of these different rulings, specifically, oops, did I lose it? When Congress or the Supreme Court overruled Roe versus Wade. I mean, that's a clear indication that they're more of a states' rights court. The only problem with the Canada Provisions case, as you might see in the news, is that the Supreme Court can choose whether they're going to review it or not. They can be like, I don't think we're going to try on that case. They might say, oh, that's already been done in 2005. So even though when we do amend returns, and that in itself is a reasonable enough argument to amend your returns for a refund, I like within the meaning argument more. We put it in there. We put both in there, and I recommend that you do too if you're going to amend your tax returns for a refund. And so the way we do that, and that's something that I also didn't include in these slides, and I wish that I had, but one of the things that I think my tax attorney colleagues and I might argue about is that, and you're going to hear, and especially from attorneys that might be advising people who then write me hate mail about how we're doing things and saying that it's wrong and fraudulent, they might be saying that, like, well, if you're going to amend, then you need to have what's called an opinion. And that you can get from any reputable cannabis attorney, tax attorney, and they'll write you an opinion. And that's all good. They tend to be a little bit of expensive. And I think for like higher refund amounts, it's not a bad idea to do that. And especially if it's over 2 million, then it goes in for a review with the IRS. You actually have to like go toe to toe with them personally. That's what it sounds like to me. And you want to have an opinion for that in with your tax return. And then, but if you're like looking for a couple $100,000 worth of refunds, then we use a form called the 8275. And that is a tax form that's included in the tax code to give us the opportunity to dispute the interpretation of what the tax code is. So the 8275 is included in the tax forms as a tax form for us for this very purpose, to tell the IRS that we don't believe their interpretation of 280E is accurate, and we want a refund. Now, the IRS at the same time, around the same time they did that information release, which is them rattling their sabers, they said that on their facts page, so that's like just on their Q&A page, that if you're going to file it, well, they said if you file an A275R for this, then it has to have a reasonable basis, which some people were using basis as maybe they were using constitutional arguments that weren't the interstate commerce. Maybe they had different arguments, but this argument is more than reasonable. It's absolutely reasonable. So it will protect you from fines and penalties and whatnot. I saw an article that said, oh, the H275 won't protect you from fines and penalties, but it absolutely will. And if you look at the highly debated, the high profile cases, like the Harborside and whatnot, those ones, they released them from penalties because they had a reasonable argument. And even though they lost and they had to pay tax, they abated their penalties, and they said because they had a reasonable argument and they had a professional working with them. So to say that you're going to then suffer huge consequences in case of an audit is not necessarily true. Could you? Yes. Again, I haven't represented enough of them to know for sure that how messy it can get. There are attorneys that I've spoken to that were involved in Harborside and some other high-profile cases, and they were like, that was messy, we didn't like it, nobody should do that again. But you have to weigh the pros and cons of that. Like, is it worth it to you to proactively pay tax on phantom income, or is it worth it to you to not pay that tax on phantom income and then maybe keep that tax to hire an attorney to represent you in case there is something that comes down the pipe? Same with the refunds. Do you want to just be like, okay, never mind, I'm going to just let that money go because I don't want the IRS to audit me, or is it worth like getting that money back or attempting to get that money back? And how much time would that refund for an attorney? How much time would that buy that refund? So there's all sorts of other constitutional arguments here. The Dobbs versus Jackson is what I was talking about, where they overturned Roe versus Wade. Like, obviously, the Supreme Court is more conservative. If the case gets tried at the Supreme Court for the Cannabis Division's True Leaf case gets tried, then the Supreme Court stays on its states' rights track, then it should win, and that's what they're hoping for. I'm not going to go over all these amendments. You can, these violations of the Constitution, you can look at these yourself. I'm revisiting 471C. If your account is not using 471C, then you need to look for a different accountant. I mean, at least at the bare minimum, I'm saying, like, if you don't reduce your deductions due to 280E because you believe 280 doesn't apply based on this presentation, that you should at least be doing 471C. Now, understand you can't amend your return and use 471C to recapture refunds. You can't do that unless the method was elected. Technically, we have to do a special inventory method election to elect for our clients to use 471C as their inventory methodology. But once you do that, then you can move overhead costs into cost of goods sold and inventory and thus cost of goods sold. And back in 2019, when we were doing that, we have saved our clients so many millions of dollars accumulatively across all of those years. And I would highly recommend doing that. It is a tried and true way of getting costs, saving, mitigating 280E. Some accountants are more aggressive than others. Some of them are using kind of like a 471A approach, which is obsolete. It's like dividing overhead and taking square footage and then multiplying pro rata overhead costs and putting that into inventory and then not deducting others. It's the whole like, if employees are working behind the counter working with inventory, that's deductible in payroll, and if they're selling, that's not deductible payroll. That's too much. It's old. It's antiquated. You can be as aggressive as you want, and it's as defensible as any other method. So that method of parsing out costs and overhead is just as defensible as taking 100% of facility costs, 100% of payroll costs, that because it's all legal under the code. I mean, that's what people don't understand, is it's very plain language that we can be as aggressive as we want with this code, and it's legal because it's in the tax code. The IRS tried to close that loophole, and for those conservative accountants and tax attorneys that think that they're doing the right thing, that they're not going against the IRS, that's not true. The IRS closed with regulation, which is as high, almost as high as the tax code itself. They tried to squelch it. They tried to like close that method that we were using, but it was above law. They don't have the legal right to write in tax code when it doesn't exist. They can interpret the code, but there was no ambiguity in 471C. So all of us who are using it right now, it's defensible. And I heard that the IRS is not taking it to tax court. They're allowing it to go through. So food for thought. All right, so I think that we only have 10 minutes. I don't think I'm gonna get through any more than what I have. I appreciate all of you for listening. I hope it was informational. I hope it wasn't overwhelming. Please reach out to us if you have questions. If you want a copy of the opening brief, Nathaniel said that I can circulate that. Maybe make the webinar next on that Monday before Thanksgiving. I'll turn it over to Chris. Chris?
Sorry, I was looking for my unmuting function. Justin, thank you for that. We do have a bunch of questions, as you can imagine. Just want to, right off the top, so Eleanor Ash asks, can you only go back 3 years for a refund, or are there exceptions, or how far back can someone go?
This is very important, and I'm so sorry. I should have mentioned the statute of limitations. Unfortunately, okay, so it's either 3 years from the date it was filed or the due date, the tax return you want to amend, or it's 2 years from the date it was filed. I have that written in here, statute of limitations, right here. 3 years from the date the original return was filed, or 2 years from the date the tax was paid, whichever is later. So you can actually file the return late. So if you haven't filed the tax return, like you got to go back to 2016 and you haven't filed, you can file those, and you can file those. But amending, it's 3 years from the date. So the statute of limitations for 2021 has closed. 2022, we're amending for 2022. And that doesn't close until the date that you filed that next year in 2026, or the extended due date with extension. Okay. All right. I won't go into more detail.
In other words, it sounds like a pretty big win for procrastinators worldwide.
Well, there's that. I mean, procrastinators could potentially say, hey, like this 280 didn't apply from 2016. So. But don't hate them. Don't hate people for taking advantage of this. That's what I'm trying to get at, I think. I think some people hate because they missed out, and they're mad because other people aren't missing out.
Right. And you did address this during your presentation, Justin, but Rhonda asks, just so we can get it on record, have any of your clients received refunds from amended returns? And I believe you said the answer is yes.
Yeah, if you electronically file right now, like if you get in, well, 2022 is going to be closed for e-filing pretty soon here in November, but if you amend 2023 and 2024 and you e-file it, those have been coming almost immediately, like within a month or 6 weeks. If you paper file, it's hit or miss. Like still from 2020 and 2021, the amendments we've done, they're still hanging out there. A lot of them have gotten their refunds or got their liabilities adjusted, but a lot of them are still out there. But here's the important thing to remember, that even if it's sitting out there in the ether, the fact that you filed on time, like you filed within the statute of limitations, means that it's still available for a refund. And assuming that the courts listen to reason and decide, okay, 280 is not applicable, then they will have to refund your money, and you did it in time. That's the important part there.
Okay, very good. Thanks for that. Wes Parks asks, and this might be hard to answer, but didn't TrueLive and others refile and receive a return? Was that messy? And it's my understanding, Justin, maybe you can correct me, is that publicly, because it's a publicly traded company, TrueLive did claim to have received refunds, but since tax court is a sub rosa process, it's not public, we don't really know for certain, but based on their public declarations, that did happen.
Yeah, no, that really triggered the rest of us to jump into action for refund. The TrueLeave got $113 million in refunds. And now the IRS wasn't saying that, well, 280 doesn't apply and we agree with everything you're saying. They didn't say that. They just were like, well, we're just going to give you a refund because I don't know why they give them a refund. I think it was a mistake, to be honest. If they really were fighting this, why did they give them a refund? But it could have been because of hemp. It could have been because of marijuana, medical marijuana. It could have been a variety of reasons. Maybe they were going to, but the thing is from what I can tell, they're not audited. Like they haven't audited them. They're not trying to claw those refunds back at this time. So that's, in my opinion, that's a good sign for us that when we try to get these refunds, it's unlikely that they're going to try to claw them back if they decide, oh, we did it wrong. Besides that, they have the ERC to deal with. They've sent out $2 trillion, like at least a quarter of which were all fraudulent, and they're excited about $1 billion and $2 trillion clawing ERC funds back. That's a different subject. I'm sorry. We can continue.
Sean asks, how would 280E affect an ancillary business such as a testing lab? And my understanding would be that it shouldn't, but yeah, what's your take, Justin?
No effect, no exposure to 280 for testing labs or ancillary businesses. Banking issues, you gotta watch out for the banks. They might close your bank down, but other than that, no 280 exposure for non-plant touching businesses, even though you might be touching the plant, but you're not taking possession of the plant. So packaging and those kinds of things. If you're not taking possession of the plant, then but you're doing packaging, you're good. No 280 exposure there.
And Adam has a clarification. He wants to be sure of this. So 100% of 47111 expenses that may be for SG&A can be applied to inventory. That is the cost of goods sold.
Yeah, that's the big one. 471C is the subsection, I believe, and that's where, absolutely. You got to understand that 471A was the original language, and it was imposed on manufacturing companies to force them to take overhead costs and put it into inventory. SG&A costs, the IRS was forcing manufacturing companies to take their overhead costs and put them into inventory in order to match them against their income and thus not get the deduction until the following year. So the cannabis industry back in, when I first really got into this in 2014, some smart people were using it. And so we were doing the same thing. We're like, oh, okay. But it was not very good because it was for manufacturing, even though we were using it for retail. The IRS condoned it, but 471C superseded 471A completely. It replaced it. And the language is very simple. Any business under $29 million in gross revenue can choose an inventory methodology based on their books and records. They can choose any inventory methodology based on their books and records. And if you want to include 100% of payroll, 100% of facility costs, if you want to include, other non-direct costs into your inventory calculation, you absolutely can. Our office avoids sales, though. Not necessarily like sales payroll or commissions, but like marketing costs, like billboards and whatnot. Non-discretionary. We don't include non-discretionary, is it non-discretionary? We don't include discretionary categories in the 471C calculation, but it is up to you because you have that power under 471C.
All right, we have a lot more questions, unfortunately. Maybe squeeze two in more in like the 45 seconds we have left. So we have a couple more questions about these ancillary businesses. One questioner asks about the branding license available in New York State. And then we have a manufacturer, or rather in Oakland, California, someone who's about to get a manufacturing license, and they want to know what products would be best to manufacture under 280E. Sort of like different questions there. One's plant touching and one's sort of like semi-plant touching. What should folks look out for there, Justin?
Well, licensing and branding is like, I watch out for creating management companies and personnel companies in order to avoid 280E. Don't do that. We don't do that, and the IRS is very privy to that. But having a branding license, like having a branding company in which holds the license, the operating company can rent or lease or license that license from them. I don't know the local New York rules that well in terms of their cannabis department, their regulating department, what the rules are around that, but no 280 exposure there unless it's operating, unless it's also doing the manufacturing and the selling. And then I already forgot what products, all products, whatever makes the most money, man. Like go out and make money. That's the important part.
Right, but are there any particular products that someone can manufacture that would be exempt from 280E? And my understanding would be possibly not, although, you know, it's all in the devil in the details of the definition, like the selling of it. Yeah, correct.
It's controversial, but hemp products, you can manufacture and sell hemp products, and that's not subject to 280E. Intoxicating hemp, according to the Farm Bill right now.
Yeah, although that's changing as we speak, as we know. And then last thing, before we all get out of here, Crystal asks the $1 million question. Justin, will you please tell us, when will cannabis be rescheduled?
Well, it was supposed to be rescheduled this year, and I'm thinking it'll be rescheduled next year, but then there are people who are saying they're not going to do anything. And I would anticipate 2026 when the midterm elections happen, right? And then they want to try to get people back on the bandwagon for you know, Republicans or whatnot. I don't know though. I don't know, but again, like based on these arguments, you would be reasonable to assume that 280E does not apply now ahead of rescheduling.
Okay, very good. And with that, we're a little bit over time. We want to thank again Justin Botillier from Calyx CPA being here for us, talking about this really interesting and vital topic. We want to thank all of the attendees, as well as folks who gave questions. You know how to reach Justin. You know how to reach us. Thank you all so much for being here, and we hope you have a great rest of your day. We'll see you next time.